Robinhood small account trading challenge. Okay guys, if you're of an update video on my Robinhood account, so for you guys that were there when I first published a video, I basically started this account with around $100 or so, and I simply wanted to basically trade options, but I didn't want to trade options in my main long account because I've seen a lot of people on like places like Wall Street Bets blow up their accounts trading options. So I use Robinhood to trade options, and then I use Fidelity for long positions. So this is going to be like my attempt to basically grow this account during this whole market sell-off. Okay, so obviously with long positions, your stocks are basically going to go down. I've lost basically nearly 50% of my account since November 2021. So I wanted to offset some of those losses selling put options. So this tutorial is going to show you guys how to grow a small account quickly. Like I said, guys, this is just a tiny percentage of my overall net worth and my overall holdings in Bitcoins and things like that. But with so much market volatility, I felt like this is a great opportunity to profit because, you know, you can make money whether the market goes up or down using options. And I'm going to show you guys what I'm doing. So over the past week, this account is up 900%. Okay, so on May 5th or something like that, I just had a little bit of money in this account. I didn't have much money at all, and then I was able to grow this account 900% over last week. I actually took out $200. Okay, I actually withdrew some money, so I'm just gonna give you guys some of my rationale, how I'm basically picking my plays, how I'm choosing these options, and how I'm making money. So let's get into it. So first of all, I want to show you guys my most recent hit, my most recent play that did really well, and that is Coinbase. Okay, so Coinbase was a stock that I really love long term, but during crypto market down cycles, these crypto stocks are going to crash. Okay, so what I did was I was basically trading puts based on the earnings. So what I ended up doing was I ended up jumping in on May 10th, and I bought a put at a $55 strike price at $130. Now the actual contract wasn't $130. Okay, it's just $1.30, but you multiply every number by 100 because one contract represents 100 shares. And then I was able to exit that contract after earnings at around $4.13. So that was a gain of around 217%, guys. Now, I actually could have made more, and this option might actually be worth quite a bit more because, as you can see, it expires on the 13th, and as I'm recording this video, it's the 12th, and the stock is already down a bit more in after hours. But for me, obviously, I'm not trying to necessarily sell the option at its peak. I'm just trying to get the meat of the trade. Okay, so anytime I'm up at least 100%, I'm thinking about taking some profits because in my experience, you can go from 100% gains all the way down to nothing or even losses quickly. So I would say with options is like you don't have to trade things perfect. Just make sure you're getting in a good entry and you're getting good gains. You want to try to at least double your money. That's probably the easiest way. If you're up 100% or more, nothing wrong with taking some profits. You want to get in and out of the trade. This isn't a strategy where you want to really hold those puts a long time and try to wish and hope because the market can flip quickly. Okay, guys, look how quickly the market flipped during the interest rate hikes and all of these things. So when you take some profits, get out. I would say just get in and get out. Okay, so now basically most of these plays have been basically up on earnings, as you can see. So my latest play is a firm. Okay, so why am I investing in a firm? Okay, well, basically I'm buying puts on these fintech stocks. Okay, a firm is a company, they have a buy now, pay later type thing. Higher interest rates is going to hurt consumer spending. So that's one of the reasons why a lot of these tech stocks have been selling off. Stocks like Amazon, stocks like Upstart, anything related to payments has been, PayPal has gotten absolutely crushed in Q1. So what I did was I used the same strategy. Okay, I went in here, I bought a contract at 34 cents, and then it dipped a little bit. I bought another contract, so I loaded up on two contracts. This is already up 70%, $42. So with this strategy, I don't go all in. Okay, obviously, if you want to grow your account quickly, you can go all in. But not every single company has posted bad earnings. Okay, a couple of companies like Rivian and Disney, they actually the stocks actually went up. So you don't really know what's going to happen. I assume Affirm is going to go down, but you never know. So I want to be conservative. I like to probably only invest about 10%, 20% max of my account into any one trade, because if I'm wrong, I won't blow up my account. The goal here is to grow the account. It's not to just blow it up and keep having to put money back in and over and over and over again, which kind of just defeats the whole purpose of trading, because we're trading to make money on this ridiculous volatility. So what I do is I like to use a couple of sources to kind of figure out what I'm going to do with this trade. So Affirm will release earnings on the 12th after hours, and I will probably be holding this option obviously after earnings. Okay, so what I'm looking to do is I'm looking for the price of the stock to go down, and then I'm looking to get out in that first morning after the earnings is released. So far I'm up 70% on this one. I have 2 contracts. I'll be holding this one a little bit longer. Then my second play, which paid off really, really well, I kind of messed this one up a little bit, but I really think Beyond Meat can go a lot lower, basically just based on the news that they reported. So what I ended up doing I ended up buying several contracts on a Beyond Meat. I actually bought one and I sold one before market close. I took some profits there simply because I just wanted to take some quick profits. And then I bought 2 contracts expiring on the 20th. Okay, so this is at a strike price of $10. So obviously Beyond Meat has crashed. It crashed in after hours. It went from like $26 to $20. So now hopefully this contract will be a lot more, because it gives this another week to go down towards the $10 strike price. And I really don't see any upside for Beyond Meat right now. They posted really bad numbers. So if we take a look here, basically they had huge losses. Okay, their gross profit fell, margins fell, everything was pretty bad. Okay, the stock got absolutely crushed. So you know, Beyond Meat is one of those companies, I really like it long term, but with such a high short interest and just so many people betting against the company, you know, it's really, really hard for the stock to go up if there's just so much selling pressure. So hopefully we'll see what happens with this put. So we'll see what happens there. Okay, so now I want to talk about actually some tips that you guys can use when you're trading options, things that I've learned, you know, over the recent couple of weeks and even over the years, how to kind of grow your account much quicker. So if we take a look at Affirm here, okay, Affirm here, and we can open up the options chain, we can see that, you know, obviously when you open it up, it's on default as call. So make sure you don't make a mistake. If you think the stock is going to go down, make sure you're buying puts. It's really important. I think sometimes people, they make a mistake and they accidentally are buying calls when they want to buy puts. So calls are when the price is going to go up. You think the stock price is going to go up, and puts are going to go down. So make sure you're actually buying the right contract, okay? So as we can see here, these puts are going up in price. So what you want to understand is you want to think, if you're playing earnings, you probably want to pick the options that are expiring within the same week, because those are going to move the quickest. If you think that the stock is going to kind of bleed out slowly, then you can obviously pick some contracts with a little bit more time, but they're going to cost more money, okay? The premiums are going to be much higher because those contracts are more likely to be finishing in the money. So for example here, when we take a look at the contract, I think it's really, really important to look at the delta, okay? You have the delta, you have the gamma, you have the theta, and all of these are important, but the delta is really going to tell you how fast the option is going to move. So for example here, let's say Affirm is at $14.90 at this $14 put. That means for every dollar that Affirm's underlying stock moves in price, this option is going to move 37 cents. So for example, if you buy this option at $14 and the stock goes up to like 16, this option is going to start losing value very quickly. But also, if the stock goes down to 14, then it's going to be up like $37. So you should really understand that basically as the option gets closer into the money, the delta is going to increase, okay? So if it's further away, it's going to be much smaller. So for example, if we take a look at one of these options here that's very, very far away from the current price, if we look at, you can see the delta is only a penny. So that means that, you know, this option isn't likely to finish in the money unless literally a firm loses half its value after its earnings. But if we look at an option where it's already in the money, like this one, you're going to see the delta is much higher. So basically, a good way, if you want to quickly grow your account with a little bit of money, you want to try to get those options with a very small delta. Let's say Affirm Upstart lost basically half its value. Okay, Affirm is another stock that's in payments and things like that. It could lose half its value. Okay, we don't know exactly what's going to happen, but no one thought that Upstart would lose half its market cap in one day, and that's exactly what happened. So here we are with another stock like Affirm. It's trading at a $4 billion market cap. With a slowdown in spending and things like that, consumers spending less money and higher inflation, is it possible that Affirm could be a $2 billion company, in a week? Sure, why not? So that's just something you have to keep in mind. You can really make a lot of money if you're getting some of these stocks that are going to sell off very sharply, and you get them at a very, very low delta. So let's say here at the $8 strike price, if Affirm were to sell off, this option is going to absolutely skyrocket. Okay, so right now the share price is like 15 bucks. So if we were to get one where it would be a 50% cut, even though the delta is only 3 cents, as the stock price, if the stock crashes to that strike, you're going to see this option ramp up quickly. So I mean, it could be as high as like 500, 1,000, 2,000, 3,000% gains. The downside is that it's less likely to finish in the money. So you just want to be there. If you're super conservative, try to stick to options that are already near the money or in the money. Because if, let's say you think Affirm is going to crash and you just bought a $16, well, chances are it's probably not going to soar because it's fintech. So you're going to make a profit. Basically, you're almost guaranteed to make a profit. You're not going to lose. But if you buy something too far out of the money and it goes down, but it doesn't crash too much, you might lose your entire investment. So if you're more conservative, take options that are already in the money. If you want lotto tickets, buy far out of the money puts in this example that can really, really grow your account very, very quickly. If you're not sure, you can do a kind of a hybrid strategy. You can buy some puts near the money, and then you can buy some far out of the money. Now, knowing that those far out of the monies have a less likely chance of actually being worth anything, but it's okay because you hedged your bet. So that's just a couple of tips to think about. Really pay attention to that delta and make sure you're taking profits. Don't try to get greedy. If you're up 100, 200, 500%, take profits. Unless you're buying these options to actually hold the shares, which if you have a smaller account, you just don't have enough capital to buy 100 shares anyway. So if you get profits 100, 200%, take them. If you can double your money in 1 or 2 days, that's fantastic. Thinking that, stock market gains on average every year are 10% and you make 100% in one day, you just want to take the profit. Okay, you double your money, you're winning, you're fine. Take the money off the table and, get ready for the next trading session. So guys, like I said, the way I find a lot of my plays, I use two sources. I use Bar Chart and I use Earnings Whisperer. So okay, so the first thing I like to do is I like to follow Earnings Whisperer on Twitter. Okay, and every week before earnings, they'll post a picture. Okay, so this picture is really awesome because it kind of helps you visualize exactly how the earnings are going to go. So every week they'll post a picture and it'll show you Monday, Tuesday, Wednesday, Thursday, Friday. And what I like to do is I like to usually target the companies near the top of the list. In my experience, those have been the ones that have had the most volatility. Upstart was extremely volatile. Fiverr was volatile. So what you can do is you can kind of do your homework heading into the next week. Subscribe to their Twitter. They'll post this picture. You can kind of sit down and figure out where you're going to which plays you're going to target and how you're going to do things. So this can really help. And then another source I like to use is Bar Chart. So Bar Chart is really awesome as well. So for example, if we look at the earnings that are going to be released on the 12th, you can simply sit here and you can sort them by price and you can sort by change and stuff like that released, and it has the earnings estimates here and everything like that. And Bar Chart and is free as well to use. So these are just the two sources I use. So what I like to do is in an environment like this, I like to simply find stocks, like I said, stocks that are going to be affected by the interest rate hikes, which means stocks dealing with spending. So if I were to take a look at some of the companies on this list, of course, Alibaba stands out. Okay, Amazon sold off pretty high. That's a good target. Anything to do with spending, so Duolingo, that's another one, that has to do with spending as well. And of course, I talked earlier about how I had some put options on Affirm. Okay. So basically what we're doing is we're just betting against some of these companies that are going to show some volatility. Most of them are going to be posting bad guidance moving forward due to the, if Amazon and all these other much bigger companies, even Google, was posting slowdowns in advertising spending. So people are slowing down spending. Things aren't going to look so good in terms of earnings in Q1 and Q2. So these are some good stocks to target, and I like to use bar chart. You can do this by every day. What I like to do is I simply like to go plan a couple of days ahead, click in the days ahead, and see the earnings that are going to be coming out. And also they have dividends as well for you guys that have dividend stocks. So that's my strategy on how to grow an account. It's working pretty well. Okay, I did take some money out. I took 200 out. I withdrew it. Sent it to another account. So let's see how I can grow this. So far I've grown it. The first video I posted, I believe it was about 100 in there. So now we're at 356, really like almost 600, but I withdrew some, but I'm not going to withdraw any more money. I just withdrew $200 just to send it back for the initial deposit or whatever. So we'll see what happens, guys. This will be an interesting challenge, see how far I can grow this account. My goal with this account, I would really like to get this account obviously to 4 figures and then eventually to 5 figures, because I know that the markets are going to be pretty red probably this summer, and we're probably not going to have a big reversal for at least another couple of months or two. So while my long account is going down, I would like to grow this account as well. So like I said, guys, please subscribe and follow along for more tips on growing a small trading account. If you guys want a Robinhood account, please sign up using the link in the description below. You guys will get a free stock for signing up. And I'll be posting more video tutorials. Now, let me know what you guys think. Also, you can do this strategy really with any account, a Fidelity, TD Ameritrade, a Webull, Public, whatever broker you guys use. But Robinhood is awesome. The reason why I like Robinhood, even though they had the whole GameStop saga and everything like that, it has a lot of benefits. They have instant deposits, and you can trade quickly. Some other brokerages, if you deposit money, you have to wait a long time. And then with Fidelity, you have to get approved for level 2 options. So Robinhood is one of the only brokers out there where you can instantly deposit and trade, and you don't have to get approved for options. It's basically automatic. So that's one of the reasons why I like them so much. So that's it. Until next time, guys. I hope you guys enjoyed this video tutorial. Please smash the red subscribe button. We're going to keep this